Good day to you, all my listeners, to all my viewers and my subscribers out there. You're welcome to today's um, video, which I titled "Entering a Trade." A simple way to do this as a trader. Majority of us, especially the intermediate traders and the newbies in forex market, we don't actually know when to enter a trade and when to exit. Majority of us just look at the market. When we start seeing green candle, we jump into the trend like buy. When we see red candle coming down, we enter the trend to want to sell. I want to make this video just to guide us on how to do this and do it right as a forex trader, a beginner, and an intermediate trader. Now we're going to look at this market volatility 10 as our case study. We're going to look at volatility 10 as our case study. As you can currently see, the market is, we're looking at it on the higher time frame. This is the higher time frame, and we have the monthly time frame right in front of us. This is the monthly time frame, and as you can see, we have a key area of interest right in front of us. Look at what is currently happening. This is a strong, zone where we have multiple weak rejection. If we turn it into the line chart, you can actually see what is happening. This is a strong rejection zone. This is what is currently happening in the market. On the line chart, you see how pronounced this is. The price got here, it dropped massively, and it came back. And what happened? It got to the same zone. You see this drop came, try to come, break through and fall. Another pull back to that same zone, and we are getting this. This is what is currently happening. Excuse me. What is currently happening in the chart now? If I'm a trader and I want to, since this zone is a very strong zone, and I want to make profit out of this as a beginner, as a newbie in the forex markets, and you want to actually make money out of this, you just sit back and relax, and you observe, watch what is happening within this zone. Though this is the monthly time frame, so it will vary. It will take more time for the market to move back into the zone. It will take more time, so we can actually look at it from a different angle on where we can actually see a concentration area of concentration. We'll have rejections, weak rejection, and stuff like that. So we can actually look at the market from that angle. Then we'll try to apply our trade and make more profits from it. Now this is the monthly time frame. I want us to break it down a little to the lower time frame so that we can actually get a clearer picture of the market. Now let's look at it from the weekly time frame. And this is how the market has been in the weekly time frame. Let me minimize this a little. As you can see, this is a zone. This is actually a zone, strong zone, where anything can happen in the market. If the market happens to push above this, then we should be looking at a change of trend. But as it is currently, the market is still on the downside. It's still on the downside, and we are still, you can still see the market is, selling, still on the sell direction. Now, entering a trade as a forex trader, as a beginner, the safest way to enter a trade is to wait for the market to push into your area of interest. Majority of us, we actually think forex is it's like a video game where you play like contract. Like a game called Contract I know very well. Yeah, you just pick your part as maybe the main character or the actor with the pad, and you start shooting when you see the bad guys and stuff like that. No, forex is not like that. Forex, in the forex market, you have to look at key area of interest if you really want to make money from forex. And if we go down to the lower time frame, like the daily time frame, we can actually pinpoint certain areas where we can actually trade and make money from. Now if you look at this zone, Let's look at this zone. This is our key area of interest now. Let's look at this region. Let's say this region. Now, this is where the market currently is. Market is currently in this region. Now, let's look at this region where we can actually say, okay, we'll wait for price to get to a key area, then we take a position. Now, if you look at this line, let me bring this line. If you look at this horizontal line, you can see something. You can see, if you look at this line, you can see multiple weak rejection. Look at this area. There's a concentration of weak rejection, like how many times price tried to pull you know above this and get rejected. It came again and rejected. You see, you just look at your left hand side, you see reactions. Now this same place acted. This is a strong resistance, from the downside. This is a strong resistance. So if you actually want to trade here, when you note one, two, three rejection, you can actually see, okay, when the price come here, I'm going to sell this candle. This is the daily candle, and see what happens. Immediately the candle touches the horizontal line, which is this resistance zone. You see what happened. The candle sold for the whole day. Look at the strength. The whole day, you get this strong, downward push. The price actually bought to this area. What happened? Getting to this horizontal line, which is a zone, a seller's zone. What happened? Price started falling, fell down all through for the whole 24 hours. This is what happened. You understand? Price came down, even tried to rally back. What happened? The rejection started, kept, continuing. And what happened after then? You see what happened? Price fell down all through. That's if you have to count 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 days, a week plus. Price kept falling. Now it rallied back. Tried to gain momentum, because you can actually see this is also a zone. This is another zone. This is another zone where price is rejected, and price got rejected here. And what happened? It rallied, came back to that same zone where we have multiple weak rejection. Got through with a strong bullish candle, and also get rejected. And what happened? Price fell down, and the fall was a very strong fall. As you can see, it fell down all through and went downward. If we were to look at it on the RSI point of view, we can figure out, or we can actually say, okay, this is what actually happened. So when majority of us don't actually know how to use this indicator, but I would say it is very, very important. It is necessary we have it. Once in a while, we can actually use it to determine what is actually happening in the trend. Now this is my RSI, and see what happened. You see what happened currently when price got to the oversold region. What will happen? Whenever price get to the oversold region, it doesn't actually stay there or continue selling. Something must happen to push price back into the main chart, because forex market is a game of buyers and sellers. When the sellers have oversold, when they have gotten enough profits to their satisfaction, they'll want to relax, enjoy their profits by giving up on the markets, like allowing buyers to come in to do their thing, or to play their game. In a normal sense, as a business person, if you are into a petty trade, or you are into a particular business and you've been doing this business for a very long time, you sell and you make profits, you would want to go for holiday sometimes, because they say all work and no play make Jack a dull boy. And if you keep selling, doing your business, you're not playing, you're not having fun time and stuff, you see yourself wearing out, and it could lead to something else. It could even fall sick, death might even come and stuff like that. But if you are a businessman, a very good businessman, and you actually want to, you know, enjoy life after sales, maybe you want to go for vacation, Dubai visit and stuff. You may want to say, okay, with this business, I've gathered a lot of profits. Let me just go and relax. This is what is actually happening in the forex market. When the sellers have made a lot of profits, they'll want to go, go with their money, go relax, go chill. Excuse me. Excuse me. That process of that period of going to relax and chill, buyers will come in and will say, okay, let's do our business. Since the sellers have sold theirs and they've gone to relax, okay, we can actually do our own business by buying, and this is what actually happened. And see what happened here. You see, the price got overstretched by sellers. Sellers have done their deal. They've made a lot of profits and they've backed out for buyers to come and overtake or come and take the market. And this is what actually happened. The buyers came in, they jumped right in, started doing their thing, selling, buying their products, giving out their products to whoever that's interested to buy. And the buying continues for a very long time. If you have to count the number of candles, on the buyer side, if we have to count, it's more than, we can say this is more than, let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. This is 24 days and still counting. This is up to a month. This is, let's say, a month, 1 month of buyers in action doing their business. And getting to this point, this place is a strong zone. If you look at it on the higher time frame, like I rightly said from the beginning, it's a strong zone. It's a strong zone. Price has been acting up. Whenever price get to this zone, we get this push. Price kept falling, and when the buyers get to that zone, what happened? What happened? Where were we? Okay, buyers got to this zone and they couldn't go above it. Sellers jump right in after enjoying their money from the little holidays they went. They jump right in, say, oh, let's see what we can do. Let's see. We've been here, and after all, after spending all the earnings and stuff like that, or our profits, can actually come right in to take something from the buyers. And the sellers came in, started pushing price downward. Buyers are still saying no, the ones we've had is not enough, and that is how the forex market actually is. So it is a tussle between buyers and sellers. So we have these indicators to actually help us, to actually guide us. For those of us that actually know how to use indicator, you can actually write me. My WhatsApp number is there. You can email. You can join for our mentorship program, so that you will be schooled on how to make use of these indicators. There are other indicators that are very active, that are very useful in this market. You can actually, install them on your PC, your desktop. We don't have indicators for for phones, so you don't call in to say what indicator can actually. If you want to use indicator for phone, there are some. It is the ones that comes with the phone that you can actually use. We don't have a standard indicator that you can install, you download or you buy and install in your phone. No, we don't have that. So if you actually want to trade this market and make profits, if you want to be successful, you need a laptop, a desktop, a very sound one, where you can have this MT5 install and other charts that are useful to forex installed, and indicators that works very well, installed, and you are good to go. So this is it. So if I was trying to pinpoint our key area of interest, which is what is currently happening in this zone. Looking at it on the daily time frame, I will say, okay, let's go to the lower time frame and find the key area where we have multiple week rejection. Knowing the trend direction is very, very important. Like currently, if you see what is going on here, this is the direction. Sellers came in here to push price down. So let's say this is the direction of the current situation of things on this market. Prices, the sellers are trying to push the price down. If you look at my RSI, like I said, whenever the RSI is below level 50 on this RSI window, we know it's a sell. It's a sell. And the RSI respects trend as well. This is what is trending on the RSI. it's a sell. So always note that when the RSI, it's only when the RSI is saying something different from what the main price is saying that we think we can now think on that otherwise. But look at my moving average is above um is above level 50 and the RSI is below. So it is price is actually coming down. So we're actually looking at a downtrend unless something happened. So we have to go to the lower time frame because as you can see, there's a pin bar here on this side of it. That's the last um, candle before this bullish candle. You see this bullish, this we have a bullish engulfing uh, candle. This where this strong bullish candle is engulfing this bearish candle. It's almost engulfing both candles. So we say this is a bullish engulfing. If we are to introduce the candle stick pattern indicator, which I believe is very active to the chart, if you can introduce that indicator, you see it's so clearly in the chart. Now, this is it. Look at what the indicator is actually pointing at the chart. We have multiple areas where we have different happenings with the candlestick pattern indicator. Like you can see, this is a downtrend. Whenever we have the bear harami, bearish engulfing, bear cross, we know it's a strong downtrend. So we are going to look at this market from the lower time frame. We are going to the 4 hours now. Let's see what is happening. Now you can see we have a bullish engulfing candle right here. Let me take this off so that we can actually see what is happening. Sorry, let me take this off. Yeah, you can see this is a strong, zone. It's a strong zone, and right here on my RSI on the 4 hours time frame, you see what is happening. The moving average and the RSI is actually the moving average is actually acting as a support, pushing the RSI upward, and this is what we are currently seeing. It's a bullish move, and we're expecting price to fall down because this is a strong supply zone where we have an impulsive movement downward, a strong bearish candle falling down to the downside. There's a disagreeing candle before the strong bearish candle. Now we can actually say this is a key area of interest, and we can make this a zone. This is a strong zone where we have a candle disagreeing with what is currently happening, disagreeing with this candle before this strong impulsive move. Now we are going to go to the lower time frame to see actually pinpoint our entry so that we don't miss out, and you can actually know where to enter, ride the trend. Now going to the 1 hour time frame, 1 hour time frame, you can actually see where the move started. And as you can see, let me take this off. As you can see, this small bullish candle before the strong bearish candle, you can see a strong disagreeing candle before this. And what you do, you place a trend line, you place your trend line, or you place a horizontal line, rather a horizontal line just at the base, at the close, at the open of the bullish candle. You place the horizontal line at the open of the bullish candle before the bearish candle. Then when you look at what happened in this area, what happened when price gets to this horizontal line, you see multiple weak rejection. We have the first candle came, it got rejected. The strong bullish candle came trying to break, it got rejected. This one came in, and another candle formed trying to push price above that horizontal line. And what is happening now, as you can see, price is actually falling. But for us to get a clear confirmation, you can actually you can still push down a little to the lower time frame, say the 30 minutes or the 15 minutes. We can look at it from this area. Okay, let's look at it from the 15 minutes time frame to get a a clearer picture. Now see what is happening. We can see, okay, mm, we can bring the trend line down here and say this is it, this is it. This is when price try to push above the horizontal line. What happened? It got rejected, and we have a trend line break. Price came down, it rallied with a strong bullish candle, and what happened? Kept falling. So we can actually place our entry here, right here on this line. This is a sniper entry. For those of us that doesn't know how to um, enter a chart or ride a trend or get a perfect entry, this is how to get a perfect entry. And we're actually looking at price falling to the downside, and this is what is currently happening for volatility 10. Volatility 10, looking at it from the 15 minutes time frame. If we can still proceed further, you can actually see that the trend is actually falling. It is actually falling. We now have multiple um, bearish candle pushing price downward. So this is a clear way to actually enter the markets with confidence, with confidence. As far as we have this strong rejection, this horizontal line as a strong area where price has been rejected multiple times. This is it. This is what is currently trending. Looking at it from 15 minutes time frame, and if you go to the 1 hour time frame, you can see. So what do? What do? You can actually place a pending order. That is, if you want to if let's assume that price has not gotten to this place and you've already picked this zone, this as your entry line, what to do? You can actually place a pending order. You place a pending order with you can actually place a pending order awaiting price to get to this zone. Then your take profit, your stop loss will be above this. This is the candle that triggered the move. Your stop loss will be above this. This is your stop loss. This is your stop loss. Now take profit. We have to look at it. We turn to the left hand side of the chart to see where we actually have a strong rejection area. So our take profit will be take profit one will be within this area. That is for us, for those who want to trade, who are not greedy. You just want to trade, make your money, and get out of the market. The TP1 will be within this area. This is your TP1. Let me place it here. Let me make this take profit 1. Yeah, this is my TP1. This line is my TP1. You can actually say, okay, let me take profit here. I'm done as a seller. I'm done. Let me take profit and go and relax. Have cash, have fun. Chill with my beloved ones and stuff like that. But for those of us who are still, bold and still want to ride the trend, and we can actually say, okay, take profit 2 will be within this key area, this zone. TP2, this is my TP2. We don't want to be too greedy. You can actually say, okay, TP2 will be within this area. Some persons can actually want to hold this for long, but if I were you, I would say, okay, let me place my TP2. That's a lot of profit, and you are good to go. This can actually be our area where we can actually take profit and get out of the market without being without losing our funds. So this is it. You can actually make more money if you know these little skills, these little tricks in the forex market. How to enter a trade, when to enter a trade, the best time to enter a trade, and the best time to exit the trade. exit and exit with ease without losing your funds as a beginner and an intermediate trader. So I will encourage you guys to keep watching Mikey's FX Academy to get more updates, to be informed. Because if you are not informed, you'll be deformed. If you need information to actually know how to get this right, to take these trades, to do these things perfectly well. So feel free to call in anytime, any day. I'll be here to give you, a response. Just give you a simple way to, to enter a trade and a simple way to make money out of the forex market. So I'll see you in my next video. Give this video a like, give this video a thumb up if it's of a great value to you. And thanks for watching. See you in my next video.